Hello everyone, this is today's video analysis for March 26, 2019. Today we're taking a look at the NZDUSD New Zealand dollar versus the US dollar for today's trade analysis. Starting here on the daily time frame, we can see that this currency pair in the past several weeks has been in an uptrend. We can see the black trend line here showing a rising trend, but also we're of course above the 100 period moving average, giving us a bullish expectation here for this currency pair. The last time we challenged the moving average, we found support and bounced off it and have started this rising trend. Really the area we want to focus on though is up here where these circles are on the chart. There's some specific areas here that the market has been fairly consistent about its trading decisions, buying, selling, entering and exiting, support and resistance around pretty familiar areas here on the chart. The yellow, the pink, and the orange shaded areas at the top. Let's talk about the blue circles first. Blue circles show resistance at the orange zone. That's close to 0.6935 at the bottom of the orange zone. And support at the pink zone. Pink zone is 0.69 down to 0.6890. So that is pretty much what the market's been doing for the past several months. We're going back to late November, early December, when the market came up the first time, left-hand blue circle, and challenged that orange zone. Couldn't break it, turned around and went back down. Then here in the middle, did the same thing, and in recent days, we've seen the market touch the 69.35 area and bounce back down. Black circles, interesting too, because that shows what happens if it gets under the pink zone. 0.6890 again is the bottom of the pink zone. Top of the yellow zone, 68.70. And so the yellow circles show that once it's under the pink zone, resistance is there and support is at the yellow zone. That's pretty common here for this currency pair over the past couple of months. So we know pretty well with some confidence where our trading decisions should be made. Either the orange zone, pink zone, or the yellow zone in recent months and weeks. Let's go ahead and zoom it in here. And so now what we can see is over the past week, past few days, we can see the market finding that support at the yellow zone as we zoom in, 68.70. It's been challenging above 68.90, 69, the pink zone. It's had a difficult time staying above it, but today we see something different that we haven't seen. Previous black circle, left-hand side, current area here, we have not seen the market close in recent weeks, months actually, above the 69 level and the pink shaded area. So this is something new. Yesterday closed, today opened above that pink zone. So for the day, as we climb above what was resistance and clearly holding as resistance, we now look at this area as a support. And the risk here is that the market turns back around and gets back underneath the pink zone. Is that a possibility? Absolutely. We know that this candle hasn't closed. This day hasn't closed. The current day hasn't opened and closed above 0.69 yet. So there's still a possibility that this candle suddenly turns around, turns bearish, and gets back underneath here. That's the risk in the scenario. So there's always risk in the market. But now that we're above it, our expectation has increased that it may continue to go towards the orange zone again. And again, the risk is it gets back underneath the pink shaded area. Let's take it down to the 4-hour time frame. Now the circles are going to change shape when we get down here, so that's going to be a bit confusing, but in fact they're very confusing. Let me take the circles off so we can really get a handle on this. So here we are. We are above, again, it got above here, but remember when we looked at this area on the daily, it was just a quick spike above and return below. It didn't open and close. It didn't even close above on the daily. Let me reiterate that right there. This candle right here. And let's put a X right on it. This one with the black X, quick spike above, return back down. So when we go down to the 4-hour time frame, there's that black X right there, and you can see that's where the market got above and came back down. Didn't stay above the pink zone. So here, this is different, right? We already know that from the daily that this is different. So as long as it's above here, this becomes an opportunity for us to be long, targeting the orange zone, of course, and the risk and stop loss would be under the pink zone today for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.